Welcome to the deep dive. Today we're jumping straight into Johnson & Johnson, J&J. Big player in healthcare, obviously.
Huge. Pharmaceuticals, med tech, consumer health,
Yeah.
though they spun that last one off mostly.
Right, good point. So our mission today is simple. Give you the key insights on J&J's stock right now. We're using recent reports and their Q1 2025 earnings call info.
Exactly. No fluff, just the core stuff you need to know. We'll distill it down, look at the numbers, the outlook, what analysts think, the whole picture, but, focus.
Okay, let's do it. Q1 2025 performance. What did we see?
Well, top line, worldwide sales hit $21.9 billion. That's up 4.2% operationally compared to last year. So decent growth there.
Okay, 4.2% operational. And earnings.
Net earnings came in at $11 billion, which gives a diluted EPS earnings per share of $4.54.
And the adjusted numbers, sometimes they tell a slightly different story.
Yeah, they do. Adjusted net earnings were $6.7 billion, and the adjusted diluted EPS was $2.77. That's up 2.2% year over year.
So growth on both reported and adjusted EPS, but maybe not as strong on the adjusted side.
Right, but what's really interesting is how they got that growth.
Mm-hmm.
They were facing some serious headwinds.
Ah, yes, the headwinds. Like what?
Well, the big one was an 810 basis point negative impact. That's quite substantial.
810 basis points. Wow. Where did that come from?
Two main things. First, biosimilar competition hitting Stelara, their big immunology drug.
Right, generic versions entering the market, basically.
Exactly. And second, changes from the Medicare Part D redesign. That also created pressure.
So managing growth despite that kind of drag is, well, it's pretty notable, isn't it?
It really is. It kind of speaks to the strength elsewhere in the business, like their innovative medicine division, the pharma side.
How did that perform?
Still saw 4.2% operational sales growth. And this was driven by, get this, 11 key brands that had double-digit growth.
11. That's impressive. Which ones stood out?
Darzalex was a big one, up over 20%. Tremfya also strong, up 20.1%. And Rebrevin plus Lazcluze, that combination therapy saw growth over 100%.
Over 100%. Okay. That's significant.
Definitely. And then you have MedTech, their medical device segment.
How did they fare?
Also positive. 4.1% operational sales growth there. A lot of that was fueled by acquisitions. They bought a Biomed and Shockwave recently, you remember?
Ah, yes. Integrating those must be helping.
Seems like it. And new product launches, too. But it wasn't all rosy in MedTech. Orthopedics actually saw a decline, about 3.1%.
Any reason given for the dip in orthopedics?
They said it was due to temporary factors. We'll have to see if that rebounds.
Okay. So solid growth drivers, but we mentioned headwinds beyond Stelara and Part D. What else are they facing?
Yeah, there's more. Foreign currency exchange is one. They estimate that's going to be a $600 million hit for the full year.
Ouch. Always a factor for global companies.
Right. And then tariffs, especially impacting MedTech. That's another estimated $4 million headwind.
So currency and tariffs adding up to $1 billion potentially.
Pretty much. And, of course, the ongoing talc litigation. That's still hanging over them.
Yeah.
They tried a $10 billion settlement recently, but it was rejected.
Yeah, that story just keeps going, doesn't it? Adds a layer of, well, unpredictability.
Absolutely. Big uncertainty there.
Okay, so with all that context, what's their outlook? What are they telling investors about the rest of 2025?
Well, despite the challenges, they actually raised their full-year guidance for operational sales growth. They now expect it to be between 3.3% and 4.3%.
Interesting. Raising guidance even with those headwinds.
Yeah. Now, the recorded sales growth guidance, which includes the currency impact, is a bit lower, naturally. That's expected to be between 2.6% and 3.6%.
Got it. And looking further out, long term.
They're really banking on their pipeline. They highlighted several drugs with significant potential riboflavin, plus Lascruz, Spravato, Tremfya again, and something called Icotrokinra.
Some key potential blockbusters in the works then.
That seems to be the hope. And they're putting money behind it. They announced a massive $55 billion investment in their U.S. infrastructure over the next 4 years. $55 billion. Wow. Where's that going? Manufacturing, R&D, technology.
Right.
Basically investing across the board to support future growth.
Okay, that's a strong signal. So how is Wall Street reacting to all this? What are the analysts saying?
It's a bit mixed, actually. The stock price when the report came out was around $154.93.
And J&J's own fair value estimate?
Very close, interestingly. $154.39.
Okay. But what about independent analysts?
The average price target over the last 6 months is higher, around $162, but there's a pretty wide range.
Like how wide?
Well, you've got Raymond James lowering their target slightly to $162. Guggenheim raised theirs to $166. Goldman Sachs is at $159.
Okay.
But then you see Morgan Stanley raising to $175. RBC Capital up at $181. Citi's Joanne Wunsch at $185.
So quite a spread.
Yeah. And Wells Fargo and Stifel are around $166, $170. Cantor Fitzgerald is way up at $215, very bullish. And Citi reiterated a buy rating.
Huh. That really shows different perspectives on how those growth drivers and headwinds balance out, doesn't it?
Exactly. Analysts are clearly weighing things differently. Some are more focused on the Stelara erosion and tariffs. Others may be more on the pipeline potential.
Makes sense. So let's recap the key risks investors should probably keep an eye on. We mentioned Stellara's sales erosion.
Definitely number one. The tariff impact on medtech margins is another big one.
Right.
They also flagged some potential short-term disruption in their surgery business due to restructuring maybe around $250 million in revenue impact.
Okay.
The talc litigation, as we said, huge uncertainty. Plus, general competitive pressures in areas like orthopedics and electrophysiology. And always the risk of a broader economic slowdown impacting things.
So yeah, a decent list of things to watch, but it's not all risks. What about the positive developments, the innovations? You mentioned the pipeline earlier.
Right. There's quite a bit happening there. They had positive phase 2b data for a bladder cancer treatment called TAR-200. Showed a very high complete response rate. That sounds promising.
Yeah. Darzalex got an expanded indication in Europe. Positive phase 3 data for riboflavin plus LECRUZ in lung cancer.
Okay.
Tremfya got FDA approval for Crohn's disease. Positive phase 2b results for Icotrokinra in ulcerative colitis.
Lots of positive trial data.
And more. Positive phase 3 for Icotrokinra again, this time in adolescent plaque psoriasis. Apparently 75% achieved completely clear skin.
Wow.
There's also new data showing long-term control with one of their drugs for generalized myasthenia gravis. And they recently acquired intracellular therapies, adding Caplyta to their CNS central nervous system portfolio.
So the R&D engine seems to be firing pretty well despite the other challenges?
That certainly looks that way. Lots of potential fuel for future growth coming through.
Okay, let's try and wrap this up then. Key takeaways from this quick dive into J&J.
Well, I'd say J&J is showing, real resilience. They're growing, especially in pharma, and making smart acquisitions in med tech.
But they're definitely navigating some choppy waters. Stelara biosimilars are a big hit, tariffs are biting, and that talc litigation just won't go away.
And the analysts reflect that uncertainty with their wide range of price targets.
Precisely. It's complex. Strong core, strong pipeline, but significant near-term hurdles.
So for you, the listener, hopefully this gives you a clearer, focused picture of J&J right now. It's definitely not straightforward.
No, it's nuanced. Strengths and weaknesses, opportunities and threats, all playing out.
Which brings us to a final thought for you to consider. Given everything we've talked about, the innovation, the competition, the legal issues, the economy, what single factor do you think will be the most critical for J&J's stock performance over the next year or so?
It's a good question to mull over. Is it the pipeline delivering? Is it managing the Stelara decline? Or maybe resolving the talc issue?
Something to think about. And if you found this focused analysis helpful, and you want more deep dives like this, breaking down complex topics...
Yeah, please do subscribe to the channel.
Absolutely. Subscribe, hit that notification bell. It really helps us out and ensures you don't miss future analyses.
Thanks for tuning in.